Hi everyone, welcome to this channel. I am Michelle. Thank you for joining me here. Today we're going to explore a critical yet often misunderstood area of internal auditing, audit on corporate governance. Before I begin, please feel free to subscribe to this channel and hit the notification button so that you will receive the latest podcast videos seamlessly. Let me start with a fundamental question. What is corporate governance? The Institute of Internal Auditors defines governance as the combination of processes and structures implemented by the board to inform, direct, manage, and monitor the activities of the organization toward the achievement of its objectives. At its core, corporate governance is the system by which companies are directed and controlled. But why should we, as internal auditors, care about auditing governance? Because governance sets the tone from the top. It affects every internal audit engagement, whether assurance or consultancy. Poor governance can lead to operational failures, compliance violations, reputational damage, and ultimately, corporate collapse. In the next couple of minutes, I'll walk you through 1. What a governance audit is and why it matters. 2. The key frameworks that guide our work. 3. A step-by-step approach to conducting the audit. 4. How to report findings and drive improvement. Let's begin. A governance audit is a systematic evaluation of how well an organization's governance structures, processes, and controls align with its policies, ethical standards, and legal requirements. Unlike financial audits that deal with numbers, governance audits look at the basic systems behind organizational behavior and decisions. They examine both concrete elements, like documents and processes, and less tangible aspects like company culture and values. Why do we conduct governance audits? Organizations run governance audits for several critical reasons. Identify hidden risks, financial, reputational, or operational risks that might otherwise go undetected. Ensure compliance, verify adherence to laws, regulations, and internal policies. Build stakeholder trust, demonstrate commitment to transparency and accountability. Strengthen oversight, improve internal controls and decision-making. What do we actually audit? A governance audit typically covers board structures and effectiveness, risk management processes, internal controls, ethical standards and compliance, stakeholder engagement, decision-making and oversight processes. Before we dive into the how, we need to understand the frameworks that shape our approach. The G20/OECD principles. The G20/OECD principles of corporate governance are the leading international standard for corporate governance. They've been designated by the Financial Stability Board as a key standard for sound financial systems. The 2025 methodology provides the tool to assess implementation of these principles. Key points from the OECD framework. The ultimate purpose is to identify strengths and weaknesses in corporate governance. Emphasis is placed on outcomes and functional equivalence. There are many ways to achieve good governance. Implementation must be adapted to national circumstances and cultural differences. The IIA's Global Internal Audit Standards, GIAS. The 2024 revision of the GIAS introduces a more structured, comprehensive approach to internal audit governance, focusing on 5 domains, 15 principles, and 52 standards. 3 principles are particularly critical for governance auditing. Principle 6, authorized by the board. The board must approve the internal audit charter, audit plan, budget, and ensure the internal auditors has access to all necessary data. Principle 7, positioned independently. The internal audit function must be independent. The CAE should have a direct line to the board. Principle 8, overseen by the board. The board must set internal audit priorities aligned with organizational strategy and emerging risks. The 3 lines model. The IIA's 3 lines model helps us understand roles and accountability in governance. First line, functions that own and manage risk. Second line, functions that oversee or specialize in risk management and compliance. Third line, internal audit, providing independent and objective assurance. This model is not a guarantee of success, but it provides a logical framework for understanding how governance should work. Other relevant frameworks: COSO framework for internal control systems, ISO 37000 for governance management systems, national codes such as the UK Corporate Governance Code, Security Commission and BNM related guidelines. Now let's get practical. Here's a step-by-step framework for conducting a governance audit. Step 1. Define scope and objectives. This is the most critical step. You need to clarify what will be audited: board structures, risk management, compliance, ethics, stakeholder engagement. What are your goals? Are you assessing adherence to best practices, regulatory compliance, or overall performance? The primary objective is to assess the organization's adherence to its governance framework. The scope must be clearly defined, outlining the specific areas, processes, and risks to be evaluated. Pro tip: set SMART audit criteria: specific, measurable, achievable, relevant, and time-bound. Examine the foundational documents: board charter, committee mandates, audit, risk, remuneration, governance policies and guidelines, bylaws and corporate governance guidelines. Compare these against regulatory standards and industry best practices. Step 3. Assess board structure and composition. Evaluate independence. Are there enough independent directors? Expertise. Does the board have the right skills for the company's strategy? Diversity. Is there appropriate diversity in backgrounds and perspectives? Appointment processes. Are they transparent and rigorous? Tenure and rotation. Is there healthy refreshment? Step 4. Evaluate roles and responsibilities. Confirm that roles, board chair, CEO, principal committees, are clearly defined and documented. There is no inappropriate overlap or conflict, for example, CEO also acting as board chair. Responsibilities are understood and executed. Step 5. Examine decision-making and oversight processes. This is where you look at how governance actually works in practice. Review board and committee meeting minutes for evidence of informed, transparent decisions. Examine board papers. Are they comprehensive, timely, and evidence-based? Interview senior management to assess how governance decisions are communicated and executed. Don't just look at documentation, look for substance over form. Step 6. Audit risk management and internal controls. Check effectiveness of risk management frameworks, identification, mitigation, and monitoring. Internal audit reports and follow-up actions. Financial and operational control systems. Does internal audit adopt a risk-based approach driven by the company's strategy? Step 7. Test compliance and ethics. Verify compliance with relevant laws, regulations, and internal policies, anti-bribery, data protection, etc. Training records and how ethical breaches are handled. Are they documented and remediated? Critical area. Evaluate the tone at the top. Is there genuine commitment to ethics or just compliance theatre? Step 8. Review stakeholder engagement. Look at how the board engages with investors, regulators, and other stakeholders. Disclosure quality. Are annual reports, sustainability updates, and ESG disclosures accurate and timely? Step 9. Measure board performance. Review board and committee self-evaluation results. Action plans based on evaluations and evidence of implementation. Step 10. Report findings and recommend improvements. Summarize strengths, weaknesses, and specific risks. Clear prioritized recommendations with timelines and responsible parties. Ensure the audit report is clear and user-friendly for both management and the board. Common challenges. 1. Assessing culture and behavior. Corporate governance is driven by humans. Auditors will be required to make cultural judgments based on qualitative and unstructured data. 2. Governance in form versus substance. Governance mechanisms may exist in form without functioning in substance. Look beyond the documents. 3. No one-size-fits-all. There is no single model or requirement. Governance structures should be individually tailored to the organization. Best practices. 1. Use a structured framework. The GIAS, COSO, and OECD frameworks provide proven methodologies. 2. Ensure independence. The internal audit function must be positioned independently with direct access to the board. 3. Align with strategy. Internal audit priorities should align with business objectives and risk exposure. 4. Focus on outcomes. Don't just check boxes. Assess whether governance actually achieves its intended outcomes. 5. Consider the organization's specific context. Understand the regulations and expectations specific to your jurisdiction and industry. Let me leave you with the key takeaways. Corporate governance auditing is not a one-off activity. It's an ongoing approach encompassing processes, standards, rules, and practices. It guides not only operations and administration, but also risk management, compliance, and ethics. The internal audit function has a vital role in the corporate governance structure to assure on the effective management of risk and to evaluate and improve governance structures. Effective corporate governance audits reduce risks before they cause major problems, boost operational efficiency through better processes, build stronger internal controls and oversight, enable better strategic decisions with solid governance data, gain investor and stakeholder trust through open practices. Remember, good governance is not just about compliance, it's about creating a foundation for long-term sustainability, ethical decision-making, and organizational success. As internal auditors, we are not just compliance checkers. We are strategic partners in building stronger, more resilient organizations. That's to the end of my sharing today. If you found this podcast is useful, please do share it out with your friends and colleagues. Thank you and have a great day ahead.